Hello and welcome to the 2:30 Factor. Last 1 hour of trading session remaining absolutely dull markets. There's really no activity in the market. Markets are going down 20 points, coming up 20 points, and that's precisely how it has been. The stock specific action is also low today. In the last few days, not that markets were different, they were quite dull, but overall, you get a sense that the activity is low. The overall trading activity is low. FIs are selling at every high level, and that's why well-known, over-owned names are seeing some selling. Small cap index is down about 0.10. Nifty Junior is up marginally up. BSE mid cap is also marginally up, but there is a little bit of outperformance and a little bit of profit booking in this space, and that's why you can see the advances are 40% versus about declines being 54. It was earlier almost close to 50-50, but it is slightly deteriorated, but very, very marginal profit booking. It's not that what is down is really seeing a lot of selling. So if you look at the Nifty losers, PNB is down 2.5, SBI is down 2. We have been focusing in on banks and what can come in on the base rate over there. That can be a big threat, and that's the reason why probably these names are nervous. HCL Tech is down about 2%, 860. Actually, the entire tech space is seeing some selling. Bank of Baroda is down 2, Infosys is down about 1, Kotak Mahindra Bank is down about 1.3%. Again, you can see Infosys over there. On the third plaque, we have ICICI, HDFC, and Yes Bank. These are also banking names. Banks and tech are probably the two losers or the two names that are losing out today. Tata Steel, it's a stocks in news. They have refinanced their $1.5 billion of debt and maybe at a lower price. That's why they would have refinanced. It's up 3%. Lupin is up 2.5. There is some activity in Lupin going on. Cipla is up about 1.5%, 658.59 for Cipla. Maruti had a couple of tough days, but now it's clearly up 4,624. Hindalco is up 1.3. Dr. Reddy's third or the fourth day of straight gains. It has really been a big underperformer. Maybe some contra buying is coming into this name. Reliance, Asian Paints, Sun Pharma are some of the other gainers. Sun Pharma started at this level. They've got an approval coming in. Reliance and Asian Paints are some of the other gainers. Let's look at the broader market and what's happening over there. So aviation, let's just pull up that space separately. It's clearly one buzzing sector in this entire market. It is aviation and the oil marketing companies. Just look at Jet Airways. Let's pull up SpiceJet. Let's pull up Interglobe Aviation. All of these names are buzzing in. Jet Airways on your screen is up 8.7. SpiceJet is up 6% to 71. Interglobe Aviation, or the recent listing of Interglobe, which has actually re-rated the sector, is up 1.5. But you look at from the lowest point of the day, it's up about 2.5 to about 3%. Some of the other gainers, GMR Infrastructure has started to gain 17.25 for that name, 5% higher for GMR Infrastructure. JSW Steel was up 4% yesterday, followed by good 3% move coming in today. The entire metals pack has been seeing some amount of buying. CESE up about 3.5 to 4%, 575 for CESE. Amtech Auto is up about 3%, 43 odd rupees. Bharti Infratel 3% higher, 402. Tata Steel is up 2.3. Lupin, Ajanta Pharma, Apollo Hospital, EIL, that's Engineers India Limited, SAIL and Marico are some of the other gainers. Arcom is closer to 78.4. Imami, Dabur, Cipla are some of the other gainers. Some amount of buying or some pickup in activity seen in the last 15-20 minutes. TVS Motors is the top loser. It's down about 5 odd percent. It's of course declared numbers. Numbers were weak, but I think more than numbers, it's what's going to happen in Chennai, how it's going to impact numbers going ahead. That's something maybe playing on investors' mind. 5% decline for this name. Cox and King is down 3. India Cements is down 3. Syndicate Bank is down 2.8. Motherson Sumi, with what's going in Volkswagen, which contributes 40% of its profit, is down about 2.6 odd percent. PNB, OBC, Natco Pharma, Federal Bank, SRF are some of the other losers which we can see. Mayuresh Joshi from Angel Broking is now joining in. Mayuresh, good afternoon. Thank you so much for taking out time for us. What is your view on the market? Every day we are seeing FIIs selling. How much essentially will DIIs be able to support? Do you think this selling will continue till we have clear global macros?
Afternoon, Pankaj. So I think it's a mix of both. And on the domestic side, what probably happens with the winter session, specifically keeping in mind what happens with the GST, is something that a lot of people are monitoring. And again, I think it's a well-known fact that corporate earnings are going to take time to revive. So I think the markets have just stated that bit to a fair deal. But clearly, on the domestic side, what happens with the winter session, and again on the global side, what the Fed does with its Fed meeting expected to happen over the next couple of weeks, I think that is going to have a telling effect. And again, I think the kind of data that one really expects from the Chinese markets, I think if the data is not that encouraging, I think the global risk off, risk on will continue. So the volatility in the markets will continue for both domestic and international reasons, and the range of the market would be constrained within that 7,500, 8,200 band.
Right. How would you look at the banking space, the selling over there?
So clearly, I think the governor's statement yesterday, specifically benchmarking it to a marginal cost of deposit, and again, I think if that probably comes through, you are going to take a hit in terms of how the deposit flow will probably happen. Yes, I think the base rates would get cut to that extent, and that is probably creating a huge overhang onto the stock. Nothing is out in the firm as yet, but clearly, I think if that comes through, I think there is a lot of apprehension on how the banking industry will react in terms of how their spreads and NIMs and margins will pan out. So clearly, I think on the public side, you're clearly seeing results not that encouraging. The working capital cycle has still not turned. A lot of industries that they probably lend to, including steel, iron, real estate, sugar, I think they're still in the midst of a downturn. So I think that it's going to take quite a while for them to come out of that. And even on the private side, I think a couple of results, specifically with ARC sales and so on and so forth, were not that encouraging. So I think the private space is something that I'll still look at. But clearly, I think the overhang on the stock in terms of no rate cut probably coming through for the latter half, waiting for a hot budget, what happens in the budget, what happens with the fisc. A lot of data points need to be monitored over the next 2 to 3 months. So clearly, I think banking stocks will probably stay in the range.
Right. Do you think there is a risk that what happens to private players, the competition over there, with Paytm and some of the other wallets doing very well, that business model of some of these banks may be challenged? Is that the risk that you're seeing, which may not lead to very sharp incremental buying?
No, clearly I think private is something that we probably like, and again I think with the inclusion of a lot of these payment banks, the private banks are geared up to the whole digitalization initiative that you're probably saying, including payment banks. So clearly on that front, I think the private banks will do sufficient amount of capex to ensure that the customer satisfaction on the digital front is given to the fullest. Having said that, probably I think they're in a much better space compared to their public sector counterparts when it comes to capital adequacy, asset quality, and though the valuations are a tad bit higher compared to the PSU pack, clearly I think the earnings premium would sustain for the private space. So I think private space is something I continue to like, and again I think there is a whole lot of scope. So I think payment banks will obviously give competition, but again I think there will be healthy competition with the private banks, probably will get geared up.
Right. How would you look at the tech space and with what's happening in Chennai? 30 to 40% of their employees are over there, maybe 20 to 30%. Do you think that will have a big impact, 4-5 days of shutdown, as far as their big slowdown, or Q3 is generally a very soft quarter for these companies? You think it could have a big impact on the revenue estimates?
So very unfortunate of what is happening in Chennai, but again IT companies would have a marginal hit, but I think very difficult to quantify the kind of losses because of the shutdown in Chennai operations for a lot of these IT majors. Again, clearly, as you rightly mentioned, I think Q3, Q4 are traditionally weak quarters. You'll have a lot of furloughs with Christmas holidays around the corner. Q4 is when the client budgeting exercise will start happening. But again, as I was maintaining my stance for the last few weeks, FY17 numbers for a lot of these top tier IT companies would show a very positive indication both in dollar and rupee terms. So in constant currency terms, we're expecting a good show in the second half of FY17, and that will probably again justify that the client mining exercise they're doing, the kind of utilization level pickup that we'll probably see would be reflected in its earnings.
Right, and how would you look at IT in context to what's happening with what's happening to rupee, how the global demand is shaping up? You think overall, despite valuations being attractive, IT may not perform in the near term?
So yes, I think it will be underperforming at least for the next 2 quarters for reasons known to the market. So I think if there is any positive surprise that probably comes through in terms of EBIT margins for a few of these companies, or utilization levels going up, or again I think a few order wins coming earlier than one probably expects, I think that can have a positive show. But I think the IT companies might underperform for the next quarter. But it's a long call that we're probably taking. We're taking a call over the next 12 to 15 months, where our belief is that if you leave aside these short-term volatile moves that IT companies face traditionally in Q3 Q3, Q4, the numbers would stack up in a much better fashion in FY17. So yes, I think Infosys, TCS, SCL Tech, with the respective business model, their business lines, utilization levels going up, client mining exercises going up, the TCV is actually standing very, very tall for a lot of these companies on a quarter-on-quarter basis. I think that would hold them in good stead.
Right. How would you essentially look at mid-cap IT? You think they are better placed? They are the space where, money could come in. Digital could be a very big part in, some years for them. So do you think mid-cap IT is the space to be in rather than the large-cap ones?
No, we like the large cap, Pankaj. Again, I think purely based on how the bottom-up approach in terms of earnings will pan out and where valuations are stacked up at the current juncture. And mid-cap IT has given a phenomenal performance. So yes, I think a lot of these companies are having niche offerings, and clearly I think these offerings would stay. But again, I think the earnings, looking at their balance sheet, I think if the share prices probably run up ahead of earnings expectations, and if there is any amount of disappointment that probably comes through, you might see an equal amount of correction probably take place on these stocks. Having said that, I think within the mid-cap IT space, Mindtree is something that will still continue to have a hold recommendation on. I think the company is doing phenomenally well, and my take is that the EBIT and the EBITDA margin should sustain for these companies over the next 2 years.
Mayuresh, just stay on with us. We'll take a quick break, come back in 2 minutes. Lots more to discuss on the other side. Nifty is down about 25 odd points. Nifty continues to be down about 25-30 points. No major movement actually today. Just you can see that chart for the last 15-20 minutes or till about from about 12:30. The market has been absolutely this. It has not seen any change. It has not seen any gains coming in. Autos as a pack has recovered. So let's look at some of the auto names like M&M, names like Bajaj Auto. Despite not that great set of numbers for Bajaj and Hero, these names have not done. TVS has not recovered. In fact, it has added on to losses. But some of the other ones on your screen now, Maruti, Eicher, Bajaj, all of them have recovered. Numbers for most of these companies were slightly below estimate. So we were talking to Mayuresh. He's still with us. Mayuresh, what do you make of the weakness in the two-wheeler space? Month after month, they are delivering weak numbers. Is it a cause of worry?
So clearly, Pankaj, I think at the beginning of the year, a lot of managements were not too hopeful in terms of how the volume growth will pan out. Add to that, I think the deficient monsoons, lower MSP prices will definitely increase the rural demand probably will remain subdued for the rest of FY16 as well. So I think if you take out the festive month of Diwali, which spread across October, November, I think the sluggishness in terms of volume growth for two-wheelers would continue. However, I think if you look at Bajaj Auto or Eicher Motors in isolation, I think the numbers were a little bit on the softer side as expected. But again, the export markets expected to hold up. And the disruptions probably in the export markets, specifically in Nepal, Egypt, I think if those disruptions are taken care of, the management is very hopeful over the next few quarters. I think the normalization of sales, at least on the export front, will start happening. Three-wheelers are doing phenomenally well. Similarly for Eicher, I think the kind of numbers that you're probably looking at with capacity expansion coming through. And clearly, if you look at the kind of mix that you've seen, both from the commercial side and the MDEP part, I think we're very, very hopeful in Eicher Motors from a long-term perspective as well.
Right, but overall, how would you play this space as far as two-wheelers is concerned? Would you stick to the tried and tested names like Bajaj and Hero, or TVS, which is trying to make it mark, so maybe Eicher, which is expensive but is growing more than about 30-40%?
So clearly, I think as I mentioned earlier, Hero, the rural sales account for around 30-40%, and clearly the cost optimization program that Hero's management has embarked upon, I think a large part of it is just traded by the market, savings to the tune of 200 odd crores, no royalty in the books. But clearly, I think numbers is something that we are very, very hopeful and keen on. So clearly within the space, as I mentioned earlier, I think TVS, with the kind of losses that it might face because of the unfortunate accident or incident in Chennai, I think is going to take a toll in terms of how numbers pan out. And though the management is very, very hopeful in terms of garnering market share from the current 13.3 to 14.4, 14.5%, and the new launches have been very well received, our take is that valuation is looking a little bit expensive at around the 300-310 mark where TVS had reached. So clearly Bajaj and Eicher is something that we like from the two-wheeler pack at the current juncture.
Mayuresh, just I wanted to ask you this. I was just looking into the details of the November numbers. Scooters for TVS has grown by about 22%, which of course has been growing. But it has even been growing for Honda. But for Honda this month, it was down about 5%. Do you think TVS scooters has more acceptance than Honda? This is the first sign of that. They've done a new launches. They have, make their mark across the country. Do you think slowly and steadily it will start to, converge and it can grow faster than Honda, which is the leader in the scooters right now?
So again, I think time will tell, and again, I think the acceptance, as I said, for TVS Motors new launches were very well received, and it's the geographical spread across the country that the numbers will have a telling effect. So I think if it is well received across the country, I think they can give Honda a run for their money. So clearly, I think it is numbers over the next few months that can create a differentiator. But again, I think Honda has been a market leader in the scooter space. I think it's a well-known brand. The acceptance is there. The dealership, I think the distribution, and again, I think the servicing points are very well laid out. So I think all these facets and aspects need to be looked at. But clearly, I think would wait for further declines on TVS Motors because, as I said earlier, I think 305, 310, where it has reached, was a fair value estimate that we had on the stock.
Right. So the business is good. The changes that are happening is good, but it's priced to perfection.
Oh, yes.
Right. Would you say similar things about aviation names, Jet Airways? You would have asked anybody at the start of the year, which is one sector you want to avoid, it would have been aviation. But it's been the best performing sector this year by far.
Oh yes, and no doubt about it. So clearly, I think, as I said, I think the technical call will still remain over the next 2 quarters. The ATF prices are down. They're expected to remain down because Brent is expected to stay in a range. The load factors because of the holiday season in Q3 is expected to inch up. And again, I think you're probably going to see realizations in terms of fares being at elevated levels. So clearly, I think Q3, Q4 numbers are going to be a lot better for airline companies. But again, I think it's a highly volatile industry. I think it goes through times of patchiness and it goes times of extreme extravagance, as we've probably seen over the last few quarters. So I think it's not a business which will give you a consistent cash flow in terms of a fundamental call over the next 2 to 3 years. And clearly, I think even if you look at the way the net worth for a lot of these companies are panning out, leave aside the blip that we saw in Interglobe, I think SpiceJet might continue their good run over the next 2 quarters. But then again, I think there is no fundamental shift that is happening in terms of how their cash flows are panning out.
Right, but in aviation, when they say that the cycle starts, or in such sectors, when the cycle starts on the upside, again it becomes very, very strong. So do you think that the cycle has just started and the numbers will start to follow, which means more upside is there at least in the near term, say 6 to 12 months?
Well, yes, as I said, Pankaj, I think over the next 2 quarters we do see stocks performing, and again, clearly, I think the stock price will be indicative of that action over the next couple of quarters. But whether that will sustain for the next year, year and a half, 2 years, very difficult to say, because I think the kind of business that they are into, it's a high cash burn business. And again, I think the kind of regulatory charges, maintenance costs, competition, I think all these factors need to be taken care of. There are traditional weak quarters that the airline industry is also faced with. There is international competition that they face. And again, I think for them to generate, as I've said earlier as well, consistent cash flows, very, very difficult for this industry. So the next 2 quarters, the numbers might appear good, the stocks might still move up, but does that justify to take these stocks as a portfolio pick? I think it's very, very difficult at this point of time, looking at the kind of rally A that they've witnessed, and again, I think the business model that they basically have.
As you're saying that in a portfolio, you may not want to pick it, but if there is a big fund manager who runs a lot of money into India, don't you think Interglobe, being the valuation that it is, $7 billion, market leader, cycle being in favorable, would be questioned as to why this was a big miss? Do you think that the size, the way it is being operated, the response that it has got, all of that will force a lot of fund managers to look into these
So clearly, I think there has been a lot of institution buying that has taken place in Interglobe, specifically at the time of the IPO. And at the current juncture, probably the valuation is looking a little bit steep. So clearly, I think there is a lot of institution interest in stocks like Interglobe Aviation within the aviation pack. And the float probably is a little bit amiss when it comes to the free float that is available for markets to invest in. So clearly, I think the company has a very reasonable business model. It's profitable. It has got a huge market share when it comes to the Indian skies, except for that blip on the negative net worth that it witnessed around 137 crores just before the IPO. The management is very, very focused both in terms of achieving growth, in terms of gaining market share. And again, I think profitability is one of their key parameters. So I think rewarding shareholders will also be at the utmost mindset of the management. So clearly, I think investors who have subscribed to the IPO, my take is that you should hold on to a stock because the airline is profitability, prices are expected to stay low, and all the other circumstances that will play for airline stocks for the next 2 quarters would work in favor of Interglobe Aviation as well.
Mayuresh, thank you so much for taking out time for us. Always a pleasure talking to you. That was Mayuresh Joshi talking about aviation and how one should approach these names after the big run up that we've seen over there. Markets down absolutely marginally, 20-25 points. That's where the markets have been. There is a 5-point uptick here and there. We're taking a quick break. Coming back into the activity in the market seems to be very, very limited.